parks and the forest, round the beautiful county of Meath. Oh, beautiful Meath, you've got all that I need. Your rivers, they flow with delight. Your fields are so green, there's plains to be seen, and your towns are so gay and so bright. Fishing down the Boyne, I remember the time you would think it was all just a dream.
Hello, everybody, and welcome to episode 2 of the Meath Business Podcast. So where Shane Collins here from Priority Placements Recruitment are interviewing me businesses or people from Meath about their business, even if their business is outside of Meath. And second up, we have Enda McGuinness from Investwise Financial Planning, where Enda is an investment director and a proud Meath man. How are you, Enda?
I'm good, Shane. How are you?
Good. No, thanks. And thanks for coming on, Enda. Good. So just, I suppose, an overview of your career, Enda, and how you progressed to becoming investment director of Investwise. And I see you've done a degree in economics first after leaving CERT. And I suppose what was thinking there and how you progressed on to where you are now.
Yeah, I did a degree in economics in UCD. I think not by accident really, but because I always had an interest in business and finance, throughout school, and that economics was probably my favorite subject in secondary school, the one I did best in. So I suppose it kind of naturally led on to doing an economics degree in UCD. And at the time, I think UCD were one of the few days that did a pure economics degree. So did 3 years in UCD, enjoyed it. Academia wasn't always the strongest part of it, but there were enough parts of the degree that I enjoyed it and decided that I wanted to do something in finance or in business itself. Wasn't sure exactly what, so I started at the beginning once I graduated and really got a job in fund services, kind of really working in back office of financial services. So worked with a company called IBT, but that's since been taken over. They're called State Street, so a large fund service provider in Ireland and that. And I worked in their transfer agency, so it gave me a good understanding of how investment funds work from an administration point of view and what the mechanics of them are and how trades are executed between different counterparties and that. So that gave me a good grounding as to what the actual office-based work was, and also what how investments and funds worked. Progressed then a couple of years later into DEPFA Bank, which were a lender into basically large infrastructure products, and that was very much a middle office role. So acting as the middleman between the bank and the counterparties, ensuring that loan origination was performed correctly and that all payments were made and any relationship issues that arise. So it was really much a face-to-face role with clients who were primarily based abroad, but DEPFA Bank were a German lender who were based in Ireland and really engaged in infrastructure lending. After a period of time there, then decided that I really enjoyed it. It was the client-facing aspect of it that I really want to progress with, and moved into a more front office-facing role in the investment arena with a new startup in the Irish market called AXA Financial. So what AXA Financial did, they were the investment arm of the AXA Insurance Group, who a lot of people will be familiar with. And we were involved in setting up a wealth management offering for the intermediary sector. Okay, so for financial advisors who had high net worth clients who want to invest either through their pensions or outside of a pension, and it involved setting up the fund, the first open architecture fund platform in Ireland at the time. Okay, so we set up in 2008, and the business was offering access to Irish investors to global investment funds. Okay, so, and it was really offered them through financial advisors or intermediaries or financial planners and that. And then again, that was very much a client-facing role, building relationships with financial advisors and their clients to help them guide them through what their investment options might be, and offer them a more global access to investment asset classes and sectors and investment funds. Traditionally in Ireland, most investment was done either through the bank who sold you an insurance product or through a pension, and the investment was invariably in their products themselves, which were had a heavy focused towards Irish equities or Irish investment markets or UK, at a stretch. But this was very much a different offering, whereby you could access a global range of investment funds that was available to Irish investors that previously wasn't much. The time we launched the business in 2008 was probably not the most fantastic time to be launching an investment business in Ireland, given what happened subsequently. And the proof of that, the idea and the strategy around providing Irish clients with access to global investment funds was succeeded by, it has been mirrored a number of different times since. Okay, so I was in AXA for, I think, just under 5 years. And when AXA ultimately decided to shut the business because of where the Irish economy was at the time and the growth in Irish investments. But very shortly after that, then a number of other providers came into the market, and really now investment fund platform are probably one of the more dominant themes for people investing either through their pension or outside their pension, in terms of how their clients look to access investment opportunities to grow the value of their assets, and to provide for their income in retirement. Next move then was into Deloitte. So again, working very much on the client side, direct with clients, providing clients with financial advice, building and constructing financial plans for clients, giving advice on their pensions, on their investments, how to structure their retirement, how to manage their finances on a day-to-day basis. Okay, so that was within Deloitte had a pensions and investments arm where they advise on high net worth clients, and had a lot of referral from existing clients, within the business and within different parts of the company. And that had a brief time then in working in corporate finance in Deloitte, so working for a large private equity client on the management of the stress asset portfolio. And then I think about coming up on 4.5 years ago, I joined Investwise. Okay, so Investwise is a firm of financial planners. Okay, we create clients or financial plans for clients to help them manage their finances. Okay, and so what we like to do is see what clients want to do with their finances and help them really take control, manage their finances in a way that allows that ultimately gives them financial freedom. Okay, to do whatever they want to do to help them achieve, to put their objectives at the forefront of what they do. So help them manage their finances rather than having their finances manage them. So that's how I've arrived at Investwise over a career, I suppose, of what spans about 16, 17 years at this stage. So I went from back office to middle office to front office. So it's been an interesting journey, but learned a lot along the way.
Yeah, no, it's imagine it's good to get that experience.
Yeah.
From back to middle to front,
Yes.
and that was down to you, I'd imagine. So Investwise, the offices in Dublin and Cork, how many staff have you at the moment?
Yeah, so as of last week, we now have 7. When I joined in November 2018, there was 3 of us. So we've more than doubled in size since. Yeah, so the business is growing at a huge rate over the last 4 or 5 years. And really, I think that's due to the demand for financial advice in Ireland. It can be somewhat correlated with an uptick in the economy and people's net worth and their wealth and that. But I think it's also a sign of a maturing market, in that traditionally financial advice in Ireland was provided by banks or insurance companies or brokers. And in reality, it wasn't really financial advice, and this is a personal opinion as much as anything. It was more product sale. Okay, intermediaries acted as, or financial brokers acted as a stopgap between you and a product, and they were incentivized to sell. Whereas the financial advice market, whereby you actually receive advice on your finances rather than just a sale of a product, is becoming much more prevalent in Ireland in the last kind of 10, 15 years. And that has coincided with the improvement of education and standards within the financial advisor market. So what we do is really around building financial plans for clients. Okay, so we want to see how they manage their pensions, their investments, their annual cash flows. Have they got sufficient, protection, insurance, life insurance in place? Are they doing estate planning? Do they want to pass on wealth? How are they building up wealth? So they've got an accumulation phase, and then prior to retirement, and then a decumulation, in retirement. So the most important thing that we do with clients really is setting out what their objectives are. What do they want to do? What do they ultimately want to spend their money on? Because a lot of clients approach us and they say, right, well, I've got a lump sum of cash to invest. I've got existing investments, and what will I do with it? I want to grow it. I want to get my money working harder for me. And the first question I always ask them is, what do you want to spend it on? Okay, what do you actually want to do with it? Because our view is that the money's only yours when you spend it. Okay, until you spend it, it's not yours. It's just sitting in a bank or sitting in an investment. It belongs to somebody else. You may have the benefit of it, but until you actually decide what you want to spend it on, and whether that's buying a new house, having a holiday home, buying a boat, buying a racehorse, passing it on, investing in the business, whatever the case might be. When you make those decisions around what you want to do with it, that's when it'll give you a clear plan as to how to actually manage it, and that's when it'll become yours. That's when it'll become real, and helping people achieve that is really the basis of what we do.
Very good. And financial planning, it can be for anybody, really. And I know a lot of people might think, it's only for people that have money spare, savings, or looking to invest, or you say make their money grow. But it's for anybody, really, financial planning, isn't it? For
I mean, I would take the position that everybody needs a financial plan. Okay, because if you don't have a plan in place, then you're going to find it, potentially difficult to get to where you want to go. Look, if you don't know where you're going, on your road will take you. But if you have a plan in place, it will allow you to achieve whatever your objectives are. Be it, what age you want to retire at, what your future income is going to be, what you're planning to do with your life, what your life choices are. If you're deciding whether, can we afford to have a family? How many children can we afford to have? Can I afford to take some time out from work and start a new business? What age can I afford to retire at? Can I afford to go on holidays 3 times a year, or buy a holiday home, or whatever the case might be? If you've got a plan in place, that will tell you whether you can actually do that. Okay. So, if the more complex your finances are, of course, the more complex the financial plan. But if your finances are relatively simple, you still, I would think, need to have a financial plan in place, because it allows you to make informed decisions around your finances. Okay. Because if you haven't got information in front of you, then you're pretty much guessing rather than making an informed decision. And if you're making an informed decision, you're likely to make better decisions, and you're likely to have better outcomes with your finances. Okay. What we want for clients is we want them to control their finances rather than their finances controlling them. Okay. If they've got information around their finances and they've got visibility, then they can make decisions. And ultimately, what you're getting out of it is peace of mind. You can sleep at night going, yeah, I've taken care of my finances. I provided for my family. I've got sufficient pension and provision in place that I can have a decent retirement. I'm saving for my kids' education. I'm budgeting so that I can meet all my expenditure. And I've got an emergency fund in place, so that if the dishwasher breaks down or the car breaks down, or I've got a medical emergency that I need to pay for, I've got sufficient funds in place to do all that. So really, you've got the peace of mind that I've got a plan in place that allows me to achieve my objectives, that allows me to spend my money and manage my income in the correct way. Because there can be a lot of mystery around how people manage their finances. And most people, work out okay. They earn enough to meet their expenditure, and they cut their cloth accordingly. But it can be improved, irrespective of what the income level is, what the expenditure level is. If you've got control and visibility around your finances, you'll enjoy much better satisfaction around your finances. So putting the financial plan in place is the first step to that. And of course, plans change all the time. And the plan itself, the day you put it in place, it's a static point in time. So it should be reviewed continuously to make sure that you're taking account. If you've got debt problems, or if you're thinking of borrowing to fund a business, or to fund a new house, or to fund an investment, then you want to say, right, well, what's my repayment capacity? What's my cash flow is going to be for the next number of years? How much can I afford to contribute to my pension? How much can I afford to spend on various different expenditure items that come up, day to day? Having that information in front of you and making decisions on the basis of projections on what you think the future is going to look like will give you much greater satisfaction. So, traditionally, most people, it was for wealthy people that engage financial planning. But the real difference is that, the higher your net worth, the more complex it generally is. But even if you don't have substantial savings, I would suggest that you still need a plan. It can be very simple. It can be very complex. It really depends on your circumstances.
Very good. I suppose, and what are the first steps? Obviously, get in touch with yourselves, but then is it that you sit down with the person or people?
Yeah. So the first step, basically, we got a lot of inquiries or referrals from existing client base. They're always our best source of new clients. Doing a good job for existing clients generally tends to lead to people being satisfied with the service. And some people love bragging about, look, I've got a financial advisor, and here's somebody that has helped me and has worked well with me. Therefore, they think that everyone should benefit from it. Most people, once they've been through the process like I said, of financial planning, rather than just a product sale, like the product sale comes towards the end of it, but our existing clients come through it. But we get inquiries to the website. And our first call really is our first point of contact is really to have a chat with them and see how we can help them. What are the issues that they're facing? What would they like to discuss? And I'd say the majority of people come to us and they've got excess cash, or they've got a pension, and they've got a question on it. I've got an amount that I want to invest. Like I say, people say they've got money sitting in the bank and it's not earning anything, and they want the money to work harder for them. My first question is, look, your money doesn't know you, your money doesn't care about you. It's not going to work any harder for you than it is for anyone else, but you can manage it better. Okay, so the first thing we do then is find out what their objectives are, and we generally sit down and meet them and go through, get the current picture of their finances and see what the situation is. And then we say, look, what do you want to do? What are your objectives? Once you've got the objectives in place, and that's where the homework for them comes into it. What do you actually want to do? And we help them come up with them. We offer them some options, and then we gather all the information that is required to help us build a financial plan. Once we gather all the information, we put the first draft in place, go back and forth with them until we're happy with the information that's in there. Make sure it's all accurate. The biggest gap that we generally see is on what people are spending. Everybody knows what their income is, reasonably well. It's pretty fixed. Their expenditure, though, can vary quite wildly in terms of what they think it is and what it actually is. Best way of doing that is taking a look at a few months' bank statements and that. But once we've got it pretty accurate, we then finalize the plan, and then we go ahead and implement it, whatever the recommendations that come out of it might be. So it's it's a back and forth iterative process until somebody, or the client, is satisfied that they've got where they want to go. They've got some satisfaction out of engaging with the financial advisor, with the financial planner. It might be a question of, you've got sufficient pension provision in place, and you've got the right emergency fund. You're going to have excess cash now. You want to do something with this. You can afford to increase your expenditure, or you need to decrease your expenditure. You need to manage your debts a bit better. You need to pay off some expensive debt, and maybe retain some of the cheaper debt that you might have. But that's the process. It really in gathering information, finding out the objectives, and then developing a plan, and then implementing it. And then it's a continuous process to review it, to make sure that it still applies from year to year.
I suppose people, they have unexpected events, as in the car breaks down, or washing machine breaks down, or anything really that happens unexpectedly. And I suppose, how do people prepare for that, or manage that?
Yeah, so one of the first things we always ask clients is, have they got an emergency fund in place? Okay, and that's a sum of cash that sits in a bank account or credit union account that's there for break glass in case of emergency. Okay, and a lot of people ask, how much should it be? And it depends really on what your potential large lump sum expenditure, unexpected expenditure that might arise might be. There's no hard and fast rule, but as a guide that we generally say to clients, put about 6 months expenditure aside in an emergency fund. Okay, and really what that provides for is that if you are unable to work, you're out of work, that you can manage and continue your existing expenditure for 6 months without having to cut any expenditure. Okay, so 6 months expenditure would generally cover, a new household item, or it would cover, repair of a car, or a family member that might need a short-term loan or something like that. Wherever you think your kind of 6 months, and that would include mortgage payments, or debt repayments, and groceries and utilities and education or clothes or entertainment, or whatever the case might be. If you have that as a rough sum, then you'll probably be okay. If you've got potentially large volatility in your expenditure, in like whether it changes, usually from month to month, then you might need to consider more. But around 6 months is kind of the figure we use. So it depends if your expenditure is quite high, then that number is going to be high. If your expenditure is quite low, then that can be quite low. But we generally say minimum kind of 20,000, for a family and that. But it can vary from client to client.
Yeah. Okay. And another service, and I suppose every financial planner pushes pensions as I suppose one of the most tax efficient vehicles out there, and that's a service you provide. So if someone, I suppose, is looking to create a pension for themselves, don't have it at the moment, or even someone that has a pension currently, and maybe would like it to be reviewed, and maybe their contributions reviewed as well, again, they should get in contact with yourselves.
Definitely, yeah. I mean, I think the case for a pension is very much that it's a tax efficient form of saving. Okay, most people like to save for the future. Okay, and a pension is just the most tax efficient form of saving that there is. The government incentivize people through tax relief to contribute to a pension because they want people to have a separate source of income in retirement aside from the state from the state pension. You get tax relief on the contributions. The value of the investment within the pension grows tax free. You get 25% of the value of the pension as a tax free lump sum on retirement. And then the value of the pension in retirement continues to grow tax-free when it's in the pension. Now, you're taxed on the income, but there is huge tax relief associated with the pension. So they make total sense from a tax point of view. Okay, if you've got excess income in any given year, you should be contributing to a pension. Okay, within the pension itself, then you want to see what do I want it to look like. Okay, a pension, a pension, like I said, is a tax-efficient form of saving or investment. The investment strategy within the pension should be very similar to any investment strategy outside a pension. Okay, when I look at any investment, I want it to have 4 features. Okay, whether it's inside a pension or outside a pension. I want it to be highly liquid. I want to be able to sell it within a day and move it back to cash if needed. Okay, I want it to be very well diversified. I want to spread across a large number of investments, whether that's stocks or shares, properties, bonds, whether commodities, whichever the case might be. I want it very well diversified. Okay, because I want to spread the risk. I also want it to be very low cost. A pension does not need to be expensive. Traditionally, pensions are expensive because they're sold as products and people wouldn't necessarily have paid for the advice, directly. Therefore, the insurance company would have had to pay the intermediary and ultimately the insurance company charge it back. But a pension doesn't necessarily need to be expensive. Most pensions out there, there are pensions out there that are available that the cost of them on an annual basis is in or around 1%. And that should include an annual advice fee. Okay, traditionally pensions are probably going to cost about 1.25%, closer to 1.5% and sometimes 2%. They don't need to be expensive. They can be low cost. And the last thing with any investment and a pension, it should involve absolutely no work for you as the pensioner. So we want liquidity, we want diversity, we want low cost, we want no work. And that's the same inside a pension or outside a pension. The difference is that the pension is very tax efficient. Okay, because there's tax-free growth, there's tax relief and contribution, and there's tax-free lump sum at retirement, and then there's tax-free growth in retirement. So everyone, I think, should have a pension. The reason you get the tax-free or the tax relief is because you're giving up access. Okay, so the government is saying, if we give you this tax relief, then you're not going to have access to it until retirement. And retirement is generally, access pension is generally age 65. In a lot of cases, it can be 60. In some cases, it can be from age 50. But everyone's pension, if it's never too late to start, it's never too early to start. Okay, because of the tax relief associated with it. It's never too late to start saving. Your pension should be reviewed at least once a year to make sure that the investment strategy is correct, that the costs are correct, and that the structure that it's in is correct. Okay, that you get maximum efficiency for all that. So you should be looking at it, and you should be looking at, can I contribute more to my pension on an annual basis? Is my employer contributing to the pension? Okay, because any contribution an employer makes to a pension is effectively a tax-free pay increase to you. Okay, if your employer contributes 10% to your pension, once you're there 10 years, that is now yours, and it's yours for retirement. Okay, and there's no benefit in kind on it. There's no extra tax implications for you. Okay, so having an employer contribute to a pension for you is hugely beneficial. And it's something I always recommend clients discuss with employers. If they're getting a new job or they negotiate a new package, what's the employer pension contribution? There's huge benefits for the employer as well, in that there's a corporation tax deduction allowed on it, and employers' PRSI is not liable to pension contributions made on behalf of employees. So pensions are a very good investment for the longer term, and really from a tax point of view as well. But like I said, the investment strategy within a pension should be quite similar to investment strategy outside of a pension. The difference is that you have access to an investment outside of a pension immediately, whereas in a pension you have to wait to retirement.
Okay, and just as you mentioned there, investments outside of pensions. So that's another service you provide. And I suppose if someone has excess money, the money sitting in the bank account and it's not working for them, given the interest rates currently, and they want the money working harder for them, or someone has a current portfolio and maybe they're not satisfied with the returns on that, again, they probably should sit down with yourselves for a chat.
Yeah, definitely. Yeah, I mean, I think when people look at their investments, like I said, that the features that they should have: liquidity, diversification, low cost, and involve absolutely no work. Now, a direct property is none of them. Traditionally, Irish people had an affinity for investing in property, and especially direct property, rental property. So I'm not a huge fan of them, but there's plenty of people have them, and especially then if you throw in a mortgage on top of that, it just increases the risk that's associated with it. But definitely an investment portfolio. I always maintain that if you're going to invest, it should be for the long term, and investment by its nature is long term. Okay, when I talk about long term, I'm talking kind of 5 to 7 years, because we know that over the long term, investment markets and global equity markets rise over the long term. The short term, they fluctuate, sometimes wildly, sometimes not so wildly. I think investments, like I said, by its nature is long term, and any investment that's not long term is not an investment; it's speculation. Okay, because what's going to happen to global investment markets or global bond markets or global property markets, Irish property market in the short term? Who knows? We can't predict the future in the short term. We have a reasonable view of what global equity markets are going to do in the long term, because we've got 110, 120 years of data that shows that they rise on average somewhere between 7 and 8% each year. Okay, and that's not 7 or 8% every year. That's up 30%, down 15, up 10, down 12, flat for a couple of years. But a long term average growth in investment markets is about 7%. So that's what the benchmark should be, and that's what your investment portfolio should be. What your investment portfolio looks like is really dependent on what your time horizon is. When are you going to need access to this cash? When do you plan on spending it? And what do you plan on spending it on? How much have you got now? How much do you plan are you required to have at the time frame in which you need it? That will tell you then what your rate of return is, your rate of growth is within those number of years. And that will allow you then to inform as to what your exposure to global equity markets, i.e. the stock market, is. Okay, we can see from data that equity markets are the best performing asset class that there is over the longer term. So I would recommend that people invest in equity markets. One of the first things I tell everybody when I meet them is, for instance, my pension, I invest in global equity markets through an investment provider called Vanguard. Okay, it's no great secret, it's no great mystery. It's invested in a passive way, so it just tracks the market. We don't pick stocks, we don't pick funds, we don't try and predict what stock is going to go up and what stock is going to go down. We just want to buy the market. That's all we want to do. We want to track the market because we can see it grows over the longer term. So that's what your investment portfolio should be doing. The best way of doing that in a highly liquid, highly diversified, low cost way is investing in funds that track the market, i.e. index funds or ETFs. Okay, so everyone's portfolio, we think, should look at that. There's going to be differences in terms of, some people will have properties or might have bonds or fixed income in there, or cash or private equity or exposure to commodities. But your portfolio should align with your objectives, and your objective should be, when do you plan on spending it, when do you plan on accessing it, when do you plan on maybe gifting it to family or whatever the case might be. But our preference is for portfolios of low cost index tracking funds, so that they're tracking the market, and that there's not too much going on costs in that.
Very good. And I suppose a lot of people be wondering, how actually do Investwise charge for their services?
Yeah, so we charge a fixed fee for our initial advice. So where we create financial plans and make recommendations. So because we charge a fee for that service, then the cost of any ongoing pension or investment that you might have is going to be reduced, because we don't receive commissions from product providers or from investment providers. Because the reality is that if you think you're getting the advice for free, then you're not. You're paying for it one way or the other. More the old adage that if you're getting it for free, then you're the product. So financial advice is worth paying for, which is why we charge a fixed fee for it. So we agree what that is. The fee for a comprehensive financial plan, which looks at every aspect of your finances, from pension, investment, cash flow, insurance, estate planning, and that's €2,950 plus VAT. And then we charge an ongoing fee, as a percentage of whatever assets that we advise on, or pension that we advise on, to ensure that you're receiving regular ongoing advice and service, that you receive reviews, meetings, and you basically then got a financial advisor on retainer. If you've got a question with the client, if the client has a question for you, that they're thinking of making some large financial decisions, they want to see how it affects their finances in the future, they're going to make some changes, they talk to the financial advisor, and they're making changes to the plan. We tell them, yeah, it can work, or no, it can't work, or here's some changes you might need to make. Okay, so it's important that financial advice is paid for, and that you as a client can see what you're paying, and that there's transparency. Like I said, can be a lot of hidden costs with pension and investments, and that there doesn't need to be. They're generally hidden because people traditionally didn't pay for financial advice in Ireland. Like I said, the market wasn't that mature. It was more sales based. service rather than an advice-based service. So it's a financial advice the same way that you go to your solicitor for legal advice, or you go to your doctor for medical advice, or you go to your accountant for audit or tax advice and that. Okay, it's a professional service that's worth paying for, and you should be able to see what the costs of it are and see where the value is. It's up to you to decide then if you're prepared to pay for it. And we see a lot of clients that do it, that do get value from it, because if they invest potentially a lump sum in an investment or a pension, then they mightn't pay for it up front, but there could be the advisor could be receiving a large commission, which ultimately means that their costs on an ongoing basis are going to be much higher, and they're ultimately going to pay a lot more for the advice than they would have if they paid a fee at the outset. So it's important that people see the value of it and make the decision to pay for it.
And why Investwise over other financial planners?
Yeah, well, I think Investwise, because of the service we offer, that our core service is financial planning rather than product sale. So we start with the financial plan, and it generally can end with the setup of a pension or of an investment, but it's not our starting point. Because it might be a case that, look, you don't need to make any changes. Your pension is fine, and you've got sufficient contributions to it each year. You've got sufficient insurance cover in place. So we're not incentivized to make a sale of a product. What we're incentivized to do is provide you with a good service, whereby you are confident at the end of the process that you've got control of your finances, that you're making good decisions with your finances, that you're taking advantage of whatever your incomes are, whatever your assets are, that you've got peace of mind knowing that your financial future is reasonably secure, and you can then take time out to enjoy life and to enjoy your finances and achieve whatever your objectives are, and spend time with your family, and decide what age you can retire at, and you've got comfort and freedom. So what we offer really is a service around financial planning, and while also offering advice on investments and pensions and estate planning, or protection, whatever the case might be. If people have recently sold a business and they say, right, I've got proceeds that I want to invest or I want to manage, well, what is the best way of doing that? So I think the fact that we're quite transparent on our costs, we're quite clear as to what our service offering is, and that we want to offer value to clients and offer them a service that's very much a personal service, where, like I said, they've got the financial advisor on retainer. They've got somebody that they call when they've got a question on their finances that helps them make a decision. I think that's, it's the number of financial planners and financial advisors that operate like that in the Irish market is growing, and I think it's all the better, because the market is somewhat underserved with people offering that service. There's lots of brokers and lots of product sales people out there. But as the standard of financial advice in Ireland improves, I think it'll improve for all advisors and for all clients. People become more familiar with advice rather than just sale of a product or of a service.
Very good. And what's the best way of getting in contact, Enda?
Yeah, so you can contact us through our website, so investwise.ie. You can give us a call, or you can get in contact with us through LinkedIn, where we always get plenty of messages and referrals from existing clients and that, to see how we can help on that. So, we respond to all inquiries pretty quickly with a phone call or an email if we don't reach you, to arrange a meeting and sit down and have a chat and see how we can help and see how we can assist and help people with their finances and give them actual financial advice. Like I said, to give them the peace of mind that they want, and that they're in full control of their finances and not making any mistakes.
Very good. Well, you can see there at the bottom, scrolling across the screen, the contact details for Investwise, the website, email address, and phone number. And I really appreciate you coming on, and a lot of good information there. And it costs nothing for someone to pick up the phone to yourselves, or send an email, and go from there. So, Enda, thanks very much, and best luck with the business.
Thanks very much, Shane. Thank you.
All right. See ya. Bye-bye.
Bye.
As I walk through the parks and the forests, round the beautiful county of Meath, oh beautiful Meath, you've got all that I need. Your rivers, they flow with delight. Your fields are so green, there's plains to be seen, and your towns are so gay and so bright. Fishing down on the Boyne, I remember the time you would think